Hi, this is Larry Gaines with PowerCycleTrading.com, and in this video I'm going to show you one of my favorite trade setups. This is what we call a volatility squeeze pattern, and this type of setup or pattern offers an explosive potential price move either up or down out of the squeeze. So it's a kind of a coiling consolidation phase, and this is on CME. So what I like to do with these, I like to use the setup and then I like to use options for the trade. So you can see here we're starting to push back above the 618 retracement. I've got my momentum indicators positive, cycle 1 and 2. My momentum flow, I've got 4 time frames all positive. So also then if we look here, here's a daily squeeze. You can see by those dots. Let me show you the other time frames that are in a squeeze. 1 second. So this is my multi-squeeze indicator. So it shows you the CME's in a squeeze on the 2-day. It's in red. It just triggered on the daily. So it's a 2-day squeeze, 3-day, 4-day, weekly. So this has potential multiple squeezes for a very powerful move. So then coming back to the daily chart, you can see the dots represent when it's in a squeeze. When the dots disappear, we're out. Now we look at momentum for the direction of the breakout. So cycle 1 and 2 are above 0, so that gives us positive momentum. Now if I click this over to a 2-day time frame, chart time frame, you can see we're also in a squeeze. We're also in a squeeze on the 4-day or 3-day. Let me find that. 3-day right here, okay, 3-day, and we're also in a squeeze on the 4-day. So this has potential, for really good potential burst to the upside, and we're also in a squeeze on the weekly. So one of the things I like to do with this type of setup is do some type of protective, very defined risk trade using options. And so in this situation, set up a call debit spread. So one of the other important steps is always have a target in mind as to where the potential price can go. So we're targeting this fib level here, either 190 up to this 1272 extension coming at 191. So 190 to 191. So to keep the risk really low, set up a really tight spread here, the Feb 8 series, the 190, 192.5, so $2.50 wide. And this is an out of the money spread on the long side of the call. So at 75 cents was the setup price. Now, if we're targeting, let's say 190. So right here on my analytics, if we get a move, let's say by the end of the week on the 25th of, so if we get into the end of the week, which would be the 25th of January, and we're trading at 190, then we can see about what we'll be making on the spread. We'll be up about $35. If we get up to that next target level, we're looking at around 192. We'd be up to about 60, and then our risk is 75. So it's a really nice, tight risk-reward type trade setup. One other trade you might want to keep an eye on is Microsoft. Now, Microsoft has earnings next week on the 30th, so this might be a kind of a play for a run into earnings. We've got cycle 1 and 2 positive momentum, and when we look at the time frames, we look here at the 2-day time frame. We're in a 2-day. We're in a 3-day squeeze. Okay. 3-day volatility squeeze and a 4-day squeeze. So this has potential to push, I think, into earnings next week on Wednesday. All right, hope this helps. I'll talk to you on my next video.